Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So the format of the show is I get the requests that come in during the course of the week, and I put them all together, and I end up analyzing them. Sometimes it's market requests, questions on the market, or maybe gold, some commodities, but a lot of individual stock requests come in. So feel free to send those along, and I will analyze them on the next show. And but what I do, and I start the show with a lesson. And what I wanted to do today is actually focus in on what I see as is really the biggest mistake that I see consistently over and over again through all these years of working with people one-on-one and coaching them. I just see this happen a lot. So let me just give you, let's go ahead and look at the agenda. So the biggest mistake, so what I want to do is explain why sometimes people just have their blinders on. And this can be someone who's a day trader, but it's also, I see it a lot in guys that are actually trading off of a daily chart. They're not necessarily just day trading. But we want to take our blinders off, and I'm going to explain what I mean by that. And the goal here, and the funny thing is I talk about multiple timeframes a lot. And some people really poo-poo the longer time frames, the bigger time frames, don't think it's really worthwhile. But I'm going to show you why I think you want to start with the bigger time frames and then work your way down. And I think this can be very useful from that standpoint, because the goal here is to make sure that the bigger time frames are actually offering providing help to us as opposed to hurting us. I'm not trying to get in and out of a trade quick enough before it gets hurt by the bigger time frames. So I'm going to go through this explanation as to how this major mistake that I see taking place happens over and over again, and how we can correct it. Once we get through that, we're going to go through the symbol requests that came through. All right, let's go ahead and get going here. Before I get into the lesson, I just want to give a brief little outline of some of the things that I really like about this ACP program. And really stock charts in general, but I use the ACP side because I like looking at multiple time frames. And just the fact, so I'm just going to pull this over so you can see. This is a list of stocks that I pulled in. It's actually the S&P list. And I'm currently looking at Raytheon, but I can actually just click on General Dynamics, and it'll pull up. All these charts will change at the same time. So I can quickly go through and look at the different charts in the defense area and compare them, look at them in multiple time frames, which I think is a huge advantage. The other thing that I really do like is if I pull up Raytheon here, I can also look and see when the earnings are coming. You see how it's right on the chart? So I've posted that. It's one of the choices you can make. I've posted that right at the bottom. And if you're a swing trader, you need to know when these earnings are coming. Just the fact that I know that later next week, this is going to start to show that we're going to get earnings, and I can see it in advance down at the bottom. So I really like that. The other thing I would tell you is that the screening tool is very powerful because it does offer the ability to use multiple timeframes in your screens. And I use that all the time. I think that is a powerful component. All right, let's go into this lesson now. Let's look at Raytheon. And I do have the monthly, weekly, daily up. And I want to make sure you get where I'm coming from on this. So we've got a pretty good look to the daily chart. Okay, I mean, this is kind of emerging again after a consolidation, had strong volume. Let's just zero in on this for a second. Strong move to the upside with good momentum characteristics, both on the MACD and the ETHX, and pretty good volume associated with it. And then we consolidate, then we emerge again. We're breaking out here, and then we get a little pullback to a rising 18 above a rising 40. Got good confirmation across the board. So what I'm seeing is a lot of guys asking about a stock like this. All right. And there's nothing wrong with it. I mean, it looks fine. But the reality is you almost have your blinders on. And I can tell you in the days where I would sit there and trade off of a 5-minute chart or something like that, I would be so zeroed in on that one time frame and just focusing in on what I'm seeing on that one time frame that I wouldn't even recognize anything that's going on around it, above it, or other stocks, higher time frames, what's going on the daily chart, what the daily chart looks like, or anything like that. When I was intraday trading, you sometimes you just get so laser focused on what you're doing on the here and the now, and you just kind of dismiss everything else. And what I'm telling you is that is a huge mistake. I think it's something I see happening a lot, and I'm showing you on a daily chart how this can happen, not necessarily on an intraday basis. So yeah, this is a decent looking pattern when I look at it on a daily chart. I mean, it's not perfect, but it's good enough that if the higher time frames actually look good, then I might consider it. But I'm not starting there, right? I mean, I don't want to start with the daily and then get me juices flowing and getting all excited about a stock, and then look at the other time frames. And what I'd end up doing when I used to make this mistake myself, and what I can tell you is you end up doing is when you see something you really like on the daily chart, you kind of convince yourself when you start looking at the higher time frames that you could get through the resistance, that things are turning, that you could say, you know what, I mean, this is actually not that bad. But if you start with the higher time frames, if you start with a monthly chart and then you start that I'd call that zooming out, saying I'm looking at a really big picture. Then I go to the weekly chart and then I go to the daily. Then I think what's going to end up happening is you're not going to be as excited about this. And so one of the things I used to do, when I was trading and I have two time frames side by side, even if it were a weekly and a daily or something like that, I want to look at the weekly chart. I want to see if I like the weekly chart. Don't go looking at the trigger time frame first. So this is the mistake that I see a lot. Guys are getting so laser focused on the trigger time frame and the entry time frame and the time frame they really want to trade on, and they're kind of not, I wouldn't call it ignoring the higher time frames, but they're a little bit more sympathetic to what's taking place on those higher time frames, and they're willing to almost like ignore some of the things that's taking place. And so you got to focus in on the bigger time frames and work your way down. I think if you take a look at what's going on with this Raytheon, when we start to zoom out, yeah, I mean, on a zoom in basis, yeah, we're pulling back to a rising 18. We've got pretty good overall conditions in place. But if you look at how we're rallying into a declining 40 week, which is the 200 day, okay. And also notice how the MACD, which was really oversold when it was at 70, the price is 70. Now we've worked it back to the zero line. Do you see that? And we've made a pretty substantial move, and we're starting to come back into this really key resistance area right around 90. All right. And we don't have a lot of strength behind it. So what I don't want you to do, I don't want you to get into a situation where you look at this and you say, I think I could get in and out of this and sneak in and sneak out by the time it hits 90, because that's really where the resistance starts to show up. So here's 90, right? The 18-month is right around 90. And you say to yourself, I think I could sneak in and sneak out. And what I'm telling you is you probably could pull that off periodically, but you want the wind at your back. You actually want to look at the monthly and the weekly and have it support your thesis that I want to play this trade. And then if you get in this and you make a play for this, maybe you get in and get out, get in at 85 and get out at 90, and the stock goes to 95 or 100. That's what I would prefer. I don't want to sneak in and sneak out so fast and then have it get hammered, because the more times you do that, the more times you're not going to hit your target, the more times you're going to end up taking a loss, because the bigger time frames, you're fighting the bigger time frames. So don't get in this laser locked focus on the one time frame and not look at everything else that's going on around it. And the other thing I would suggest to you is always start with the big time frame first, so that you don't get into this situation where you're all excited about the smaller time frame and then you're trying to come up with a reason to do it on the bigger time frames. All right, so let's go ahead and get into the individual symbols now. If you're enjoying the content, hit that like button and also subscribe. Now, my research can be found at rabilstockresearch.com. You can also find information on the trading courses that I have, which I basically call a trading school now, because it's a bundle that I'm offering. And I'm also adding an additional course sometime over the next month or two. I'm going to be adding an additional course to the bundle. that I'm actually working on right now. Now, if you'd like to just start, get an idea of the approach, I would suggest buying the book, which is at rabilstockresearch.com/book. I'm offering at a discount right now. So I'm going to start out with the Dow Jones or the DIA, which I have been for the last 2 to 3 weeks. And my reasoning is that I really like the look of this pattern here. I think even though it's pulling back, it's kind of underperforming this morning. I know the QQQ is the one having a big day. I guess Apple's having a big day. And we also are seeing strength in the semis. I think that's based on Taiwan Semi having a good report. But the point I want to make here is that I know this is pulling back, but it has a really attractive pattern. So we want to focus in on the patterns themselves as opposed to what's going on right now today. What is what index is doing the best and try and chase that. I don't know that that's the best strategy. I think what we're looking for is a pullback on this daily chart on the Dow Jones. And it's starting to happen. We're starting to break the 18-week. That line is starting to roll over. I think sometime over the next 2 to 3 weeks, this is probably going to set up in a pretty attractive manner. Now, I'm not necessarily saying I want to buy the DIA, although if you want to play ETFs, there's nothing wrong with doing that. I'm just saying in terms of going in and looking at some of the stocks inside the DIA, there's some attractive patterns that really, like the Dow Jones, did nothing over the last year and a half, and are starting to emerge out of that consolidation sideways pattern. So I'd be very interested in going through those stocks and staying on top of those. All right, let's look at the QQQ, because I do know it's having a nice start to today. And what I want to point out here is I'm not saying that I dislike the QQQ. What I'm telling you is that you got to be a little bit more selective here. I do think there's still some attractive stocks inside this index, but you got to be a little careful about assuming that something that was up last year is just going to keep going again this year. I don't know that that's necessarily going to be the case. And I think it'll be a little bit more of a mixed bag here, especially in the first half of this year. So there's going to be some stocks that are a little extended that should consolidate. This index kind of looks like that. We're up against the highs. It's possible it's going to clear these highs a little bit more. And then maybe we get a little bit more consolidation to take place. So again, I'm not saying necessarily it's negative, because the overall action here is still okay. I'm just looking at, where I'd want to spend my time and looking for patterns that I think have really more significant upside. And some of them are coming from the DIA versus the QQQ. One of the key things, though, we have to keep watching is this IWM. We're trying to turn the corner. If you look at the monthly chart, it's getting this 18-month line to turn back to the upside, but now we're coming back to test. We had a really good month to end the year. Now we're coming back and testing. We've got the MACD trying to turn, but it isn't above the zero line. So it might take a little work to get going. What I keep saying is we're down to this key level right around 189, 190. I want to see this turn up, and I want to see it come back up through the 200 area. And I'd prefer that to happen with the green DI on the weekly holding above 25 and holding above red. And if we get that and we turn up and we turn this up, and we get the relative strength line, which has been turning down after breaking the downtrend line, turn down. If we can get that to turn back up, now I think we've got something that really improves not only the potential for IWM, but I think a lot of improvement in terms of where we could, I think, play the market with a broader array of stocks that could very likely participate and very likely outperform the general market. All right, let's start going through the individual symbol requests. So this stock kind of plays into what I was talking about in the lesson, all right, which means it's not exactly the same thing. And the person who asked me, I know, is knowledgeable. He's one of my subscribers, and I know he knows what he's doing. So, but I want to point out that the daily looks pretty good, right? I mean, we've got good momentum here. It's made a really strong move. Now we've just recently broken the 18-day. The MACD is starting to pull back. We've got but pretty good momentum. So this could set up on a daily chart with the weekly. But the problem I've got is the monthly. We're coming into a declining 18-month line. So does this really look, this divergence, is it, we're making a lower low in price and a higher low here. Does it look like it's ready to break through? Well, I think the way I would handle this is see if I get a setup on this pullback. I mean, if this can pull back while this is turning up, form some kind of a pinch here and get an opposing trend to the upside, then I'd be willing to take it even though we're still going to be below the 18-month line because there is divergence here. And then at that point, we're going to see how this does. If it gets through 110, it should start to accelerate and trade a little bit better. So the answer to the question is, yeah, I would consider this. I do think it's got to set up a little bit better on the daily chart, though. I'm not really interested. If it turns up from here and just kind of moves to the upside, to me, it's a little aggressive without a little bit better setup on the weekly chart. All right, I'd like to see this pull back a little bit more. All right, let's look at this. I know we're seeing Bitcoin trading a little bit better. Let's just see what this looks like. So I think this was a pretty big breakout at 12. I mean, we had this consolidation pattern. Breaking through 12, I think, was pretty important. Now, I think what I'd want to see is some kind of a little check back a little closer to the 18-week, and I think I'd consider it. Look at the strength behind this move. We've got both MACD and ADX confirming. Pretty good volume pattern as well. It's a little extended right now to try and play. Even if I were going to do this just as a swing trade, I don't think I'd really want to do it. I mean, you could, but I don't think I'd really want to play it that way. I'd rather get this a little bit better pullback on the weekly chart and then play it off the daily from there. So it's worth keeping on a watch list. I don't know that there's anything imminent for me unless I really want to trade it short term. And the potential is there coming up through 1250, 1260, something like that. You could play it for a quick pop if you wanted to do that. All right, let's look at this Veeva system. So one of the things that bothers me about this is that we've had a really good move in a lot of the software companies, and this stock just really hasn't kicked in yet or really participated to any significant degree. However, what's taking place more recently, especially as we flip over into a new calendar year, we're starting to show respect for the 18-month line. The MACD on the monthly is respecting the signal line. So we've got the makings of a potential turn here. So what I'm keying on this, we had a really nice bar last week, a nice green bar coming back up through. Now what I want to see is how this handles the test. It should come back and test or some way, shape, or form. Maybe even come down under 200. And then if we can turn back up from there, I think is where I would have a bigger interest in this. So we've already made a decent upside move, a couple higher highs, a couple higher lows. We're starting to see a little bit of momentum here. It's starting to show signs of improvement. I just want to see how this handles some selling. We should see a little bit of selling, and I want to see how it handles that on a check back. The reason why I'm not really interested in buying this second, and I'm kind of the opinion that it won't just take off like a rocket, is that we don't really have a lot of strength in the momentum yet, either in MACD or in ADX. So I'd actually like to see a little bit more strength and then look to play the first pullback. All right. All right. So Autodesk is a really attractive look, I think, here. Tight pattern. You can really see it on the weekly. You see how the distance between the high and the low of these ranges. This is not a wide and loose type of a sideways pattern. It's really, really tight. And when I see that, I get really interested. So I like the way the volume came on this breakout, and we had a little bit of a check back to the breakout area, and now it's trying to turn back up. So I think this is a good stock. Definitely one that looks very interesting. Now, ideally, I'd love to see this come back one more time, have this MACD come down a little bit closer, and then we can form like a trend line here and get a little, or some kind of a little triangle formation and then break out from here. It would be a little awkward if it just broke out right now. I don't know that I would be looking for that. I think it's higher probability that it kind of channels a little bit over the next 2 to 3 weeks. If it does that, then I'd really be getting ready for some kind of a continuation to the upside. All right, when I look at Intel, I know there's a lot of strength in the recent action. Look at these last 2 monthly bars to finish the year. Pretty impressive, but we don't really have that great of a look to the overall pattern. I mean, it's just not, there's a lot of resistance, I should say, that we're going to have to contend with. Now that we've hit this 50 mark, I wouldn't be surprised if we spend more time consolidating. Now, I would be, because we're above the 18-month and above the 40-month, and the fact that we did get through this key resistance area, as long as we stay above that 45 zone, I would be willing to play this on a pullback on the weekly chart. This needs to get a little bit closer on the weekly. We do have earnings coming in a week or two. Let's see, that's on the 25th, so not that far away, about a week away. So you do want to be aware of that. But what I would tell you is that if we get this a little bit closer to the 18-week and we can get a signal on the daily, I think I would consider it. It should have a lot of support in the low 40s. Okay, let's look at Qualcomm because as I mentioned earlier, semiconductors, to me, the semiconductors still look pretty attractive overall. There's still a lot of strength in the semis, but I think you got to be very careful about chasing ones that are kind of like rocket ships to the upside, especially the AI stocks that have made huge moves. I would be willing to hold those, but I don't know that I'm really looking to put new money to work in those stocks. However, if we look at what's going on in Qualcomm, this is a stock that really kind of has been out of favor in this sector and in this industry group, and now is starting to show signs of life, like real life. Look at the move that this is making. Look at how MACD is making one of the strongest moves it's made in the last few years. ADX, same thing. We haven't seen this kind of strength coming out of the stock. The volume pattern is very good. We had good volume on the way up, and we really, during this consolidation, it's been pretty light. So another one that I'd be watching for any kind of weakness as a potential buying opportunity. Definitely a good name to keep an eye on. Now, look at this stock. So this is a financial. All right. Now, the financials did nothing. You see how the stock did nothing last year? I mean, the market had a pretty good year. This did nothing. But look at what this is doing this year. You see how this is starting to show signs of emerging with the MACD and the ADX and this breakout? We've got a really nice breakout pattern. And again, it's another tight pattern. This is a tight look to it, and we've broken out. So now what was resistance should act as support somewhere around 50. Now, the way I'd want to enter this is go down to the daily chart. Let me just see. So earnings aren't coming for a while. So this has the potential to come down, maybe get this 18 to even cross down below the 40, or at least have these two kiss while the MACD comes down to the 0 line. And I'd love to see this ADX get below both of these DI lines. If we get that, I think we could take a pretty hard look at this. We could be watching a trend line right now. And I'd like to see the trend line break, cross the 18, get back above, say, 55 or something like that. And I think this would be pretty attractive from that standpoint. Let's take a look at PSTG. This is another stock. It's in computer hardware that really hasn't done a whole lot. But when I look at the pattern, it's really starting to catch my eye because tried to make kind of a breakout move and didn't have any follow through. But now it's forming kind of another little saucer here, and it looks like it wants to emerge. Notice the volume pattern. Notice how the MACD is turning around at the 0 line. Another really good look. So this is another one I would keep on my watch list. I think this is a good stock that has the potential to play here. It hasn't been exploited, and it's not overextended or anything like that. Let's look at another one here, the Snowflake. This, again, did nothing last year, but it looks like it's been putting together a pretty good base and just recently starting to show signs of improving volume activity and improving DI. See how green DI hasn't been above 25 like this in quite a while? So if we can make a higher low here and turn up through the 200 level, this is something that could play pretty well. So I don't know, there's somewhat of a theme here in terms of some of the stocks we're looking at, not necessarily looking to chase the NVIDIAs of the world or something like that have had big runs last year. Not to say that they aren't necessarily going to continue higher or potentially not go down a whole lot. But I guess what I'm saying is if I'm looking for more bang for the buck, I think I would have more interest in finding something that's emerging out of a base, showing new emerging relative strength. And if we get a little bit of follow through out of this, I think this is an easier way to make money in the market right now with a better risk reward equation where you don't have to take as much risk to see the potential reward. Thanks for watching the show today. Now, if you have any stock requests that you'd like me to analyze on the show, go ahead and send it to stocktalk@stockcharts.com. Also, if you'd like to learn more about MACD and ADX in multiple timeframes, I would suggest going to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.